This is the Game of Thrones edition. As you know, Game of Thrones is on. But since everybody's watching that, I'm going to do this, practice, get better. Um, so, what I want to talk about is grab UnitedHealth Now. It's at a nice discount. So, me taking my own advice, let me slide me over here. I purchased. So I'm gonna go into here. I'm gonna show you what United Health is. Put me over here. United Health currently you can get United Health at $224. Look at the 5. As you can see, this upward trend. If this is not in your portfolio, I don't know what to tell you. Um, so I went and grabbed it. So, and my strategy is when I buy, I don't buy and sell. I know they're gonna last for a decade. So I at least hit that decade, and then I purchase my hold and whatever it does. So I know the Netflix now it's on a frenzy, and a lot of people sold it, but I'm keeping mine. I, I'm I told myself I'm gonna get the Fang. So all I'm missing, I got Facebook, I got the two A's, Apple. No, I'm missing an A. So I'm shooting for Amazon. I know it's high right now, so I'm waiting for it to drop back down. It's probably not gonna get it close to that low point, and um, so I'm grabbing me that. That's pretty much it for this year. That was my strategy. Just get Amazon. What I do is just hold $100 with my initial 1,000. Uh, my strategy for 2019. Every year I change it, but for 2019, um, it's 60% stocks, which is $600. Um, 30% index funds, which is $300. So comes up to 900. That 1,000 that I invest monthly, and then the remaining 100 goes into REITs, and REITs are known for a monthly dividend. So my strategy um, is pretty much 60% stocks. This also applies to global stocks. I break the stocks into two categories. The first one is fast growth valuation with no dividends because the company reinvests the dividends back into the company. So that's 60% I mentioned before, and that this is 30% of it. So these types are which is 30%, $300. Example: Fang stocks, Facebook, Apple, Amazon, Netflix, and then Google. So they don't pay no monthly dividends, quarterly. They don't pay no dividends. The dividends that they get, they reinvest it back into it. So you're just gonna have a company that grows in valuation instead of them giving you dividends. So either way, like I favor both of them. But a lot of people you'll have, which is the second category, and that is slow growth valuation with dividends, and that's the other 30%, which is $300. Examples: McDonald's, 3M, Lockheed Martin. Right now, as you can see, United Health, that would be considered um, category two. It pays a dividend yield. So, and that's probably quarterly. I have to find out. Usually REITs pay monthly. I haven't seen stocks or index funds or ETFs that pay monthly. I haven't seen them. I've seen REITs pay out the monthly. So my strategy um, is to pretty much, since dividends get paid quarterly, which are every 3, 6, and 9. So every 3 months. Those months in between, I want to still collect dividends in those months and buy companies while I'm waiting for that third month, because your third month is going to be your payout. That quarterly that quarterly month is going to be bigger than the rest. So your 3, 6, and 9 and 12, those are your best months. That's how I'm looking at it. And then if my strategy is to get into REITs and pretty much try to make money in those slow months. So I'm also accumulating companies while I hit that third month. Because in the third month I'll be able to buy. Um, I want to get to the point where I'm at the point where I can buy one stock, which is about $10. So what I'm doing every 3 months, I'm trying to double it. So next month I'm buying companies. So once I hit January, February, March, April, May, June, I'll have more companies with more dividends. It just kind of compounds. So instead of $10, I have $20. So I'll be able to buy two companies, and then three, and then buy companies from then to the next 3 months, and then make it 30. Well, I like it to go from 20 to 40, but if not, just in uh, every 3 months, just increase it by $10. I know it seems like it's small, but once you get once you know how the formula works, it's just like it's cake, and that's what I'm learning. So you gotta test things, you gotta experiment, and I've noticed that we lost that touch, so I'm bringing it back, just the exploration part, and I'm getting into this investing in the stock market where I mean I don't know, just to say it now and feel it is like wow. Sometimes you get to places you don't know if you're gonna do good or bad, but it's something that is for you to test yourself. So me managing 113 assets now, and then your confidence just builds. Now I'm shooting for 150, and then I'm 150, 200, and then then I think once I hit 200, then I'm gonna go in hundreds because now I feel confident. Once I hit this 50, quick, I'm gonna hit it quicker. I'm gonna hit 200 by the end of the year. So that's 200 assets under management. Different philosophy from everybody else. But my thing is, this is the eighth wonder of the world. Um, Anybody can do it. Just put your money into it. Anything, because they run on interest. They run on interest. That's the game, the compound interest. So if you got money with interest in the game, in the system, that's your golden ticket. So and that's why I'm like, I got an account set aside to open up a business, but man, like this compound interest game is, to me, it feels more exciting because I've had jobs. I mean, I had jobs. I had my own businesses where I had my lawn mowing service. I used to collect baseball cards. One thing about collecting, I used to collect baseball cards, football cards. Did I say baseball? Baseball, football, basketball, and they were like it was like upper deck and tops. So I collected those, and then I collected garbage pail stickers because I like the arts. I like that weird shit. I guess you could say. So, and that's probably why another thing why I'm out here in San Francisco, networking out here. I just came from. Oh, you gotta. I went to God. I was here last night for my birthday. So I came in age 41. I'm still, check that out. So we was there. I was there last night with the Wounded Warrior Project. So any veterans out there, show you guys wounded. These guys are awesome, man. Um, these guys are awesome. Like they pay for a steak dinner like that. So I got an invite from the Wounded Warrior Project for this was like 3 weeks ago. So I was just planning. It's on my, well, I erased it today, but it was on my calendar. Like special events for me to, because I'm trying to more give myself more, because I punished myself a lot, but now I'm like I gotta start giving myself a little bit reward, and not get on that because pretty much that stress wears you down. Yeah, we need it, but we still gotta manage it. So this is, yeah, any veterans out there, military, check these guys. Me being a veteran, and now I'm signed up for all these pretty much a project like this Wounded Warrior Project. Another one is Texan Vet. Well, those are the two now, but they've been doing some. some pretty good events. I have to say, like inspiring events. So, and then me, I've been out of the social game. I'm gonna say I unplugged. So I unplugged for 5 years. Went down to South America and kind of just unplugged, and then now I'm rebuilding myself back up again. So, because that old program was so embedded, like I was like, I have to get out of the U.S. You know, and a lot of people don't think like um, that the U.S. is man. You got to strategize even living in the U.S. I can do it because I live the it's ups and downs. So and once you lived here and you know it, you should be able. And a lot of Americans that are Americans, there's so much help out here. Oh man, I mean the secret is that I see it now to wealth is saving, knowing how or allocation. I shouldn't even say it's allocation because one of your allocations is savings. Another allocation is your investment, your investments. Another allocation, starting up a business. Another allocation, emergency fund. Another allocation. This is my vacation account. Another. I was thinking about getting a trucking because in trucking, that once I get my first truck, that's how I'm gonna set up my accounts. I'm gonna have, you know, diesel because usually a truck like and then when I get paid, each account I'm gonna keep funneling money into each of these accounts. The tires, the what else? The insurance, the note. I'm gonna start off that way. Wait, the truck note, the truck insurance. Um, so one, two, three. Hold on, I got a list where I wrote down like the pretty much. Where did I put it? Um, well, let me check my phone right quick. Damn, what was that? Okay, here it is. Oh, can't even see that. So I'm gonna go ahead and this is pretty much my setup. I got account one. It's the actual just the checking. Um, account number two, marketing. Account three, truck note. Account four, truck insurance. Account five, diesel. Account six, maintenance. Account seven, tires. Account eight, emergency. Account nine, permits and license. And then account 10 is pretty much just savings for to buy another truck. I'm gonna put that in there. Savings for another truck. See how your mind grows. Before I didn't have that thought. My mind was just strong enough to take in the first nine. Now I'm on 10 accounts. Like I gave my brain space to put in more um, another account. So I have when I open up my trucking business, I will open up 10 accounts, and I'll change the name and I'll put marketing. So you see it too. Instead of how they have the numbers, now you can change it, or you can specify like what each account's for. So that's how I'm gonna do it: marketing, truck note, truck insurance, diesel, maintenance, tires, emergency, permits and licenses, and last but not least, and it just came up because I have more space in my brain, um, more gigabytes, is savings for another truck. So you see what I'm saying? So you're already starting it up. You're not. It's like man, it just that just popped in my head. So that's just a little something that um, I'll be here. I'll be doing that. I'm working towards also while I'm in San Francisco learning to be a filmmaker and that and then learning how to be a stock market investor. And I'm loving it because I invest in stocks, index funds, and which index funds is I separate. That's why I separate the two. I I categorize stocks as pretty much one structure. Index funds, that's a whole nother beast. Like there's so many different departments, and then you can go very specific, like bonds, ETFs, precious metals ETF, buybacks, ETFs, and then bonds, ETFs. So that category that I allocate 30%, and then the third structure is REITs. So those are monthly dividends. So with that, you just buy more companies. That's the goal. You want 1,000 companies. You own 1,000 companies. You're gonna it's gonna open up your brain, more capacity in your mind. I I purchased 16 assets this month. 16. I'll do that. I'll break them down into fives. I just put out a video. Here's five added to my portfolio. I don't want to try to cram everything. And that'll take me the whole month. So I'll have content because I'm still learning, the ins and outs of this game. So it was not even a game to me. If it's therapeutic, I'm getting back into making music again. So and it's a form of an expression. So I mean, it's like because I would love to be out socializing and all that, but I'm more in tune and learning this filmmaking. So and right now I'm on editing. So I want to. That's another thing too. I want to drop this and then start just editing because that's one of the things is it's I'm fighting. I'm fighting that feeling in my head like my mind wants to do other things or make up excuses or no that don't do that and or no you gotta get on school or whatever. But I'm just I'm just learning to embrace it and then talk to him like, hey man, like come on, help me out. I'll help you out. Let's do this. And then that's how I'm learning now. So, um, United Health. So pretty much, yeah, grab it now. Grab it now. Oh, I grabbed it at and it was free falling. Hold on, let me see the week. Look at that killer. Look at nosedive. So when I saw that, I'm like, yo, I gotta pick up. So I picked up one, but it even went down further. So I was like, damn. But I just felt I just know like when it dives like that, just to react. So that's just an instinct for me. So I saw it and I'm like, let me grab that before it goes back up again. And this is one of those these are one of these stocks, second category, slow growth valuation, but pays dividends. And this is a decade company. This is gonna be around. This ain't going anywhere. Bam, got it. Now I could concentrate on the next company to buy. It's just a different game, and then I'm learning more about different sectors, different companies, because it's like when you get into it, and I mean, I I, I wanted to try like Warren Buffett's where what everybody else is doing on YouTube is pretty much they got their favorites and they're just piling in on top of them. Bam, bam, bam. That's cool. I just me I just want to invest in the market. I'm cool with that. Just invest in the market. Let me play the compound interest game. As long as it's whatever company it's in, I'm still playing because it's all about the interest and how much my balance is. So that's why I'm at. That's why it's vital to monthly deposit. I would say 1,000. If you're thinking about being a business owner, you do 1,000. Then you'll be like, okay, this is because you're teaching yourself like because your expenses in a business is gonna be more than that. Well, starting off, just if you spending 1,000 expenses a month, you're gonna be like, yo, I want that 1,000 back. Then you start getting your profits. So, and I'm starting to see that now. Like that's a whole different. It's a whole different philosophy, but I like it, and I'm not stressed out about it. So that's why. And then I look at other companies. I'm like, wow, this shit is so 1,000 like now it's possible in my mind. I'm gonna be owning 1,000. I'm already at 113. So and this is just something different. I'm just playing that compound interest game. That's it. No stress, no nothing. Let it do what it do. Just buy it and then be done with it. But people Well, yeah, people and investors now they've got 10 to 20, and then they're just kicking it on. Man, if you get a hit, if one of those hits, it's gonna hit. Man, I mean damn, that just seemed like this is way. I'd rather lose a company, you know, in the future instead of like say I bought one share of Microsoft, and then another person buys Microsoft, and then they get to like 100. They got 100 shares in Microsoft, and I just have my one because this one is pretty much playing with the other 1,000 companies that I'll be having. So that's is a part of that system. But say Microsoft goes down, okay, I just lost one share. Look at the other person that had the 100 shares. Bam. So in that too, like I learned, I'm not playing the risk game. My risk is different. The risk is over with me. The risk was for me to invest into the get me for me to start collecting compound, for me to start collecting interest and then collect that compound interest. Because if you can collect interest, you can play that game. The rule of 72. Just double it, and you'll make more than a business. You just keep copying on there. Business owner, that's a lot of work. That's a lot of work. But really, is it really worth it nowadays? If you look at the numbers, I'm not seeing. Like, I'll probably do trucking because it's something just more physical. But I don't want to just be totally digital, because this digital game is gonna. I'm gonna master it. I'm like shit. I'm gonna want something. Well, me being in logistics, I like the movement of just products and services and stuff like that. So I think like with trucking, this is something like instead of me buying me an automobile for myself personally, I'll take that money. I'll buy a car for myself and buy a truck. That's how I'm gonna. So, because I want a physical and digital. I don't want to be all digital on here because I've seen a lot of people. It's just it's a balance. I haven't been on this for a week now, but I mean I miss it, but just I want to learn how to do the editing. I got it's practice. So, and that's another thing too. Like I hope this information resonates. You gotta fight. It's like life is people just already checked out. But with this United Health, um, I grabbed it at 235. It's down to 224. So that's what I'm saying. Um, those of you serious and just want a company in your portfolio that is gonna just you don't have to worry. That's just that company's adding on to your compound interest. So, and then at the price that it's at. About United Health Group Incorporated engages in the provision of healthcare coverage, software, and data con- consultancy services. It operates through the following segments: United Healthcare, Optum Health, Optum Insight, and Optum RX. The United Healthcare segment utilizes Optum's capabilities to help coordinate patient care, improve affordability of medical care, analyze cost trends, manage pharmacy benefits, work with care providers more effectively, and create a simpler consumer experience. The Optum Health segment provides health services business, serving the broad healthcare marketplace, including payers, care providers, employers, government, life sciences companies, and consumers. The Optum Insight segment focuses on data and analytics, technology, and information to help major participants in healthcare industry. The Optum RX segment provides pharmacy care services. The company was founded by Richard T. Berkey in January 1977 and is headquartered in Minneapolis, Minnesota. Current CEO is David Scott Wichman. Employees 300,000. 300,000. Headquarters Minnetonka, Minnesota. Founded in 1977. Market cap 214.29 billion. Mega. So that's a meg. PE ratio 18.31. Not bad. Dividend yield 1.38. So that's in the arsenal. Just another troop that I got. I'm playing a different type of chess. Buy 92%, hold 8%. So I mean, to me, it feels like a game. I guess me growing up with Nintendo, it it to me, I play this like a game, like a Zelda game or a Super Mario Brothers or something like that. You know, just and I think like a lot of adults, they just lost that. They just man, they already just checked out. I'm just like, fuck, man, there's so much to do, so many opportunities. People don't want to put in that work. So, but yeah, that's it. With I just want to talk about just that United Health outro. Show your support by subscribing. Comment any questions or recommendations you have. Hit the like button and share this information with curious friends and family members. Until next time, let compound interest speak for you. Alexa, smile. Sure. I smile all the time.